Hey guys, Mike here. So today we're going to answer all your questions and comments. Really appreciate all of them. And I mean, we're going to get into stuff like, how can the fund managers keep pushing the Mag 7 up? How can this market keep going higher? And so again, I'm going to show you that interview I found of this gentleman. He just did like, I think it was 2 days ago or something. He's a fund manager at Jefferies, and the other part of it, he's worked at the Fed on 2 different occasions, I believe. And he was there for '09 when they had to come in and try to bail everything out. So he has a different perspective of like the balance sheet, which I never really even thought about, to be honest with you. I've heard the Fed part of it, but if you hadn't, I think it'll make sense to you. So you get to see maybe this is what the Fed or what the fund managers are doing, okay, with our money and other clients' money and stuff like that. So, and then of course we'll get into how in the world can jobs numbers be like they were yesterday, but with all these layoffs going on, stuff like that. So we'll talk about that. So let's get right into it. Feel free to participate in the comments. So as usual, I'll start off with anybody who gives a little extra love to the channel and say thank you very much, Jenna. Very kind of you. I appreciate the extra support and stuff. Now that leads to the first question, and it says, could you inform me how all these companies are having mass layoffs, but we just had a monster non-farm payroll? And for those who didn't see it, obviously huge, created about double the number of jobs it expected 175,000 somewhere in there. We ended up doing 353,000 plus revising up the last 2 months as well for job creation. I will say, as I said yesterday, it's interesting to see that people that have been unemployed 27 weeks or more is curving upwards. All right. And the last time we saw this kind of curve up like this was the last big recession we had in '08 right there, as you can see. So let's watch that and see how that goes. That's usually not a good sign. But again, what you got to understand is who's the biggest employer in the country? It's the government, right? This is just the federal government. I don't know what state and locals employ, but that's 2.7 million, right? Who else is the biggest employers? Companies that have 500 or less employees, right? They account for about 47.3% of the private workforce in this country. But of course, who gets all the headlines, right? The publicly traded companies. Why do they do layoffs? Because they want to raise the stock price. How you do that? You cut costs. Who's your biggest cost? It's us, all right? So is it a good thing they're doing the layoffs? No. Now, the other way to look at this is, I mean, so when it comes to like the job creation, I mean, a lot of people, I don't know how they calculate that. The unemployment number is a mess, how they calculate that. But the job creations, remember, that infrastructure bill that came out, that's creating a lot of jobs, whether anybody likes it or not. That's the way it is, okay? And so there's different ways the government, one, they're doing a lot of hiring. Two, all these bills they pass that has like these funding things in there and all these different tax breaks and all this and blah, 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 blah. That's what helps do it as well. Okay. And so, and like I always say, as long as people have jobs, you can forget about a recession because they're going to keep paying those bills. Like, again, what else is coming down the pipeline? The child tax credit, right? For people who make X amount of dollars and under, it's going to be retroactive to 2023 tax year, right? So you're going to have more billions pouring out. You're going to have the business tax cuts, right? By the bill, like 47 billion in business tax cuts. Okay, that allows them to expand and use it to grow if they see fit or whatever. And so, it's just 2 different kind of economies, man. I mean, that's just the way it is. So we don't know. Like, it's so funny. You talk to small business owners, they're not happy, right? And a lot of them say, well, I'm not expanding. Who's creating all these jobs? Well, remember, how many jobs is it? I saw 353,000, right? That it sounds like a lot, but when you think about how many people the government employs and can hire, right? And so I don't know how many are coming. I just want to know how many are coming from small businesses, how many are coming from the government, that kind of stuff. Because it sure ain't coming from the mega cap companies, right? And so hopefully that answers your question. I hope, but just remember the only thing we're ever going to get to find out really is going to be what the mega cap companies are doing, right? But they're not doing it because they're broke. You see these earnings some of these companies have, they're doing it to continue to raise share price, all right? And so if you happen to have a small business of your own and you're expanding, let us know in the comments, or you know somebody that does, let us know in the comments, okay? Please let us know. Or if you happen to have a good source that talks about, that actually really does track small businesses and layoffs, that'd be a good one too. I'll share with you guys. Now, next one says, Mike, your daily option ranges is for 0 DTE trade or trend in market for the day. The answer is yes. And what he's referring to is these daily news briefs. But so you understand, on a regular day, if you don't get these, the option market, they calculate like what range they think, like the SPY, QQQ, and IWM on a daily basis is going to end up. And it ends up in this range. Usually, some people say 68%, some people say 73% of the time. Doesn't mean it can't travel outside the range, but at the end of the day, it ends up in that range, usually 68, 70% of the time, right? Now, on Mondays, that's when I do the weekly ones, right? And so Tesla, for example, remember it got above 193.30, came back down, closed the week within that, right? Meta, of course not, because earnings, it just blew earnings out of the water. And so not even close. NVIDIA never ends up in this range, I swear. AMD ends up in the range pretty often. Microsoft end up in the range. Apple, it actually dipped below the range, came back up. I believe it closed in the range, right? So when you're looking at these, look at these more of a guide. If you calculate these on your own, you can do it as well. Just use Thinkorswim or something. It's very easy to do, and there's other ways you can manually calculate this stuff. But it just kind of gives you a guide. So if you see it's not an earnings-related deal, and all of a sudden the market's just roaring, a lot of times you'll see once it starts getting up to that weekly expected move or down to weekly expected move, you'll see a reversal some way or another. If it's a regular week, if it's earnings, forget about it. So I hope that helps out. Now, and guys, before we continue, if you could hit that like button for me, I sure would appreciate it. It helps people find this video and everything. And also, if you like the content, think about subscribing, guys. Next one here comes from Eric. It says, how much more can institutional investors long the Mag 7? I think they're maxed out on their allotment to them. And then the next one says, I don't know how the market's going up. No tourists in Hawaii, ski resorts empty, UPS laying off workers. And so this is where I think these two could go hand in hand. We can say, okay, let's go ahead and look at this interview I found. And this gentleman, again, he worked at a bunch of different firms. But what I like the fact was he had spent multiple stints at the Fed. And he talks in detail about this. And he's up there with Mike Wilson, which I find funny. Is a total opposite. When you see this guy, you understand what I mean by that. But pay close attention to this. I shortened this down a lot in only like 3 clips. And the first one, he's kind of being asked, like, what are you doing? What do you think is going to happen here in 2024? Why is the market continuing to go up and stuff?
I go back to what I said in the beginning. I think you're meant to dial up the risk from where you were last year, and certainly from where we were in 2022. And the reason is not because the Fed will cut every month, every meeting starting in March or every other month starting in May. We don't know what they will do. Will is the worst word when we're describing the Fed reaction function. The Fed can. The Fed can cut 100, 200, 300 basis points if things get messy. The Fed can create a balance sheet funding facility like the BTFP to deal with regional banks. If there's a problem in commercial real estate, they'll create a funding facility. And if they get to the zero lower bound, they'll restart QE. The Fed put structure, which has never been more powerful, with funding facilities, QE, and rates, and never gone through more technological advancement than it's gone through in the last 15 years with all of this unconventional policy, has never been more of a backstop than now. And there were 2 years that we just had to live through where Jay Powell told you, he said, look, guys, I'm not here for you. That's what he said in 2022. I'm not here. I can't backstop you. I got to fight this inflation. I got to take rates up fast, and it's going to hurt, and get out of the way. And I'm going to do that because in the long run, inflation expectations are anchored. This thing's coming back down, and I will once again be able to backstop you. And here we sit. 2 years later, we took the pain. The fire trucks went and put the inflation fire out. And Jay and the Fed infrastructure, which has backstopped this market through many, many varieties of supply and demand shock, is back in play. So you were missing a line item for the last 2 years. It's called Fed put. It was in the Excel spreadsheet that you had with all your other line items, whatever you had NVIDIA, and you had Microsoft, and you had whatever other stock and individual fund structure and long bonds or whatever it was. And then there was this thing called Fed put. And it was great. It's fantastic.
Now, make sure you hear this part right here very clearly. This is what people just don't seem to hear when people talk about upping the risk and stuff.
In terms of the risk appetite story, dial it up, have your hedges, and long. And you couldn't do that in the last 2 years. I think you can do that again. And if things get messy, those fixed income hedges are going to pay handsomely. So that's really where I'm coming from in terms of the risk appetite story. Dial it up, have your hedges, and also know that the Fed does have your back in a way that they haven't for the last 2 years, but the way that they did prior. Doesn't mean we can't get 10% corrections, 15% corrections, or 20% corrections.
And so, yes, doesn't mean the market's going straight up. You're going to have, again, 3, 4, 5, 5% pullbacks or less, and then you're going to get your 10% pullback. We average at least one a year on that. Again, I mean, there can't be a 20%. Okay, so just understand what I'm saying. Remember, he put in there hedging. So firms, they hedge, right? I told you the other day where they had bought like all these contracts for the VIX. That's a hedge. That means it's going to happen, right? Because they don't want to sell out of the stock, but they also want to make money if it's coming down. They want to make money as well, right? And so they'll put hedges on. Now, this is where he starts talking about the balance sheet, okay? And he goes in great detail. Some of this stuff I get, some of it I kind of have to think twice about it and all that good stuff. But at least it's definitely educational, and it definitely gives you a different way to look at not only the balance sheet, but the national debt as well.
I want to go back to the balance sheet. And I've studied the Fed balance sheet all my life. I had the privilege of working at the Fed in 2009 when we were first debating the size of QE1 when I went back as an advisor after I left Brevin Howard. We do not spend enough time thinking about how important these big balance sheets have become in their impact to the economy and their impact to financial markets. And one of the reasons I think, and I would have been with you, Mike, one of the reasons I think we all kind of thought a 525 basis point move in rates would have just punched the economy in the face is because we lived through things like 1994, where 300 basis points punched the economy in the face, and Mexico went bankrupt, and Orange County went bankrupt, and the world was, Goldman Sachs lost 25% of its capital in a year. It was a mess. But we have this $9 trillion of high-powered money sitting in our veins, and we didn't do anything with it. We left that massively accommodative balance sheet in the system as we raised rates, and it nullified the power. And then the losses that got absorbed in those balance sheets created stimulus as rates went up, because you had winners that had locked in low rates and the losers were in the central bank. They weren't in the private sector. All of that, to me, suggests that central banks are going to look at this and they're going to come away thinking, you know what? This world of higher real rates, of a higher rate structure and a bigger balance sheet actually works better. And I think that's why Lori Logan's out there talking right now about stopping QT. We're going to stop QT probably somewhere around $7 to $7.5 trillion on the Fed's balance sheet, which is where the size of it is now. It's probably 7.6 trillion. That's a colossal balance sheet. And we're just going to leave that there forever. That means $7 trillion of our debt will be permanently funded by monetary printing. So out of the $34 trillion of debt that everybody's so nervous about that we're never going to pay back, $7 trillion is always going to be with the Fed forever. Done. Kids don't have to pay that back. That's the end result of where we stop with QT. And we are using that stimulus, and that is a huge stimulus, that accommodative side of the balance sheet, which I think is what lifts earnings and lifts nominal GDP and lifts profits and lifts valuations. We're going to leave that there, and we're going to offset that by running higher interest rate structures. So we're not going back to the 2019 yield curve, which was flat at 2%, and a balance sheet that was 18% of GDP. We're going to go to a Fed balance sheet that probably stays at 25 to 30% of GDP and an interest rate structure at 3%. And I think a lot about what that means for value versus growth, what that means for companies' balance sheets, what that means for volatility. It brings volatility and rates up. And it probably means that multiples, as you were asking about, like cash flows out in the future aren't worth as much, but you have a huge cushion in that balance sheet, a nominal cushion to things like earnings and profits.
And so again, what's happening here, right? How's the market keep melting up? How's the market keep going up? And they keep flowing into these stocks and everything. And it simply just has to do, like he was talking about, the Fed put could be back in play. They're looking at that down the road. Remember, it's not their money they're investing, right? So they're not really worried about it. And if they're wrong, they just sell the market down, right? That's what they do. And then they buy it on the lower end for sure. And so that's what you're seeing. The same way we talked about when they were going to pause, and I kept saying, market's going to rally. It's called the Fed pause rally is what I call it. I just nicknamed it that because I'd done a members video multiple on that. So I knew it was coming. And there you go. And people go, what? I don't understand what's going on. And then talking about, oh, how's there not a recession here? Because the employment, people have jobs. They may be working 3 jobs, but they're working. So they're able to keep running those credit cards up and paying the minimums. And, and then what's the government coming in and do? Oh, we're going to give people billions of dollars, 47 billion over the next however many years on child tax credit, and then make it retroactive so you get it for last year. There's just all these different ways, and that's what these firms look at, right? And in the end, they would be fired if they didn't get into these stocks. If they get to the end of this last year, like I said, and they said, oh, we didn't write up NVIDIA, AMD, or Meta at all, they're going to get fired, right? And so that's why they keep moving into this, because they don't want to miss it. And then if they're wrong, the market just sells down. And then they buy down here and start going back up, right? I mean, that's just how, it's like the stock market's a casino, not the bond market, right? But the stock market is, because right now you see the bond market saying one thing, and the stock market saying a whole different thing, right? The stock market's irrational most of the time, really, if you think about it. And then, of course, the bond market that's why they call it smart money, because they're the ones that handle what? The debt and stuff, right? And so without the bond market, there is no stock market. That's another way to look at this. I kind of got off on a tangent on that. Sorry. Now, Daniel says, what program do you use to see stock graphs? I use TradingView myself. I believe there is, I don't know if they still have a free plan, but just sign up for a free one. See if you like it and see if it works for you. But if you don't, literally the cheapest one is 13 bucks. So if you only need a couple indicators, there's no reason to go big on that. You know what I'm saying? So that's what I use. Now, the last one comes from Keith here, and I want to answer this because I've been hearing this for 3 years. He says, man, when I listen to you, you remind me of Matthew McConaughey. In one of your future videos, can you say those 3 words? And so I want to be very clear. I've never answered this question. The reason why I've never said this is because it's trademarked. And my fear is, if you don't have a YouTube channel, you don't know what I'm talking about here. But because it's trademarked, then I'll get demonetized, right? I'll get some kind of copyright strike against my channel. And I'm sure you're thinking, what are you talking about? And this has happened to me before on accident. If you see me put interviews in here sometimes, right? I remember one time I put a 10-second clip of an interview, right, into a video. And usually when you upload it, it'll tell you, oh, no, this is copyrighted, you can't use it. Sometimes it will not, though. So it'll get to the mainstream, and you guys will start watching it, and all of a sudden, you get a copyright claim against your video. And so you got to go in, either remove that, or you lose any kind of money you make off that video. And I don't know about you, but I don't want to work 3 or 4 hours for free, especially off a 10-second clip. And so when I see that, I don't know if you would get a copyright strike against me for saying those words, because obviously I'm showing you it's trademarked. I knew it would be, because it's cool. And look, I love Matthew McConaughey, love the movies, and love to meet him or interview him one day. I'll tell you what, because I get that a lot. But that's why I've never said those 3 words. That's just the way it is, right? So, in my private life, I've said it, because I've had other people in my private life say that, and I say it. But that's why I've never said it. Not because I don't want to be cool or anything, or I don't like the movie or anything like that. It's total opposite. I just don't want to lose money by saying those 3 words. So I finally answered that. It's been 3 years, 4 years? Yeah, 4 years, I guess, I've been hearing that. So there you go. That's why I don't say it. So hopefully that answers your question. So no, I will never say those videos unless I get an email from YouTube saying I can say it. But anyway, hope you guys got something out of it and everything. Appreciate all the support, the comments. Feel free to ask more questions. Again, I love the Saturday videos and stuff. And so it's the whole reason I started this channel in the first place. So appreciate it. Please hit that like and subscribe button on the way out. Share the video with your friends and family if you like. And I'll see you tomorrow to set up the week, guys. Have a good one.